Faced with those falling poll numbers, the president has been under some pressure to detail his demands for health care reform, and apparently that's what's going to happen. But it's Congress that will write the actual bill that gets voted on, not the president. So still have a lot of steps to this process.
All right, instant audit this morning. Mitch Tuchman joins us, MarketRiders.com CEO. Mitch is in San Francisco. Good to see you, Mitch. What do you make of these latest developments? Maybe the public option is off the table again.
Yeah, good to see you, Connell. And hello, Jenna. Welcome from your hometown of San Francisco.
Thank you. Bright and early.
Hey, it is bright and early out here. But I think it's great that finally we're going to find out what Obama's been planning with this health care, because I think once we take the covers off of whatever the plan it is, we're going to be surprised to find that there's not a lot there. I think the way investors can look at this, and the way that investors can understand the consensus of how everybody's thinking about this, is to look at a simple exchange-traded fund called VHT, which is a Vanguard fund. It's got 303 healthcare stocks in one basket. And this trades on the exchange all day long. And I looked at it this morning, and this particular fund is basically trading in line with the S&P 500, which tells me that the market is effectively saying, we think this healthcare plan is just going to be par with the market. So I don't know that the market is really anticipating any movement from this plan, because I don't think we have enough information yet.
Do you think it's already priced in, though? I mean, do you think that most investors, if they have a play on healthcare, already have it in the market? And what about your strategy? You mentioned that ETF. Are you in that at all?
No, we're not in it because we don't make sector bets. We basically own asset classes, small, large, medium cap ETFs for our portfolios. But those who do like to play sector bets, VHT is a great way to do it, because you don't really have to figure out which stocks are going to win or lose if you want to make a basic bet on the whole healthcare industry. And I think that the markets are super, super efficient, Jenna. The markets are saying, hey, this healthcare industry right now is on par with the United States economy and the S&P 500. I'm waiting to see if there's some real innovation with a healthcare plan. I'm so impressed with what Safeway's done. I don't know if you have ever covered their plan, but at the end of the day, if we can have some sort of a healthcare plan where people have personal financial incentives to reduce their healthcare costs, we can actually cut the healthcare expense down in this country. But if we don't do something like Safeway, I think all bets are off. Which
has been done there, as you said. A big story yesterday, now saying it wants to pay back its $25 billion TARP loan. The bank thinks it can do that without selling any additional stock. Didn't provide any time frame on it, but it said it would make the payment shortly and in a, quote, shareholder-friendly way. The key here would be doing it without selling more stock here. It's working with regulators to pay back the money while keeping its balance sheet strong. And I say it was a big story yesterday because the stock really took a hit, as you can see here. Bank of America, by the way, as we talked about this, saying it also wants to pay back 20 of the $45 billion in government aid that it received.
All right, for an instant on this, Mitch Tuchman is joining us, MarketRiders.com CEO. He's live for us in San Francisco this morning. And Mitch, just a quick take on the financials overall. We saw such a move in the financial sector yesterday. What do you think's going on there?
I think a lot of this uncertainty is getting sorted out. I think maybe the financials got a little bit ahead of themselves. So I think people decided to take a little bit of money off the table. But with respect to Wells Fargo, this to me seems to be a big show of weakness. J.P. Morgan, Goldman Sachs, others have paid off their TARP money, and the rest have said when they will pay back their TARP money. And Wells has been the only one that hasn't. So I think what we're seeing here is Wells needing to say something. But it's very, very unclear to me how they're going to do that without further shareholder dilution, which is what the announcement said. I think you're seeing Warren Buffett's influence in this company. Buffett owns 7% of Wells Fargo, and Buffett's a guy who hates dilution. I think the only time he's ever diluted Berkshire Hathaway stock to buy anything was with the General Re acquisition in 2000. So I don't know how they're going to do this without further dilution. They made, I think, about $3 billion in the second quarter of this year. So if they got to pay back $25 billion, that's 8 quarters of all of their earnings fully devoted to paying back TARP money. And I live here in California, and I just don't understand how a company like Wells Fargo, who's in the epicenter of California housing, is going to be able to continue, quote, growing organically and being friendly to shareholders to pay back $25 billion.
Well, as you say, they were, in your view, they were forced to say something. There's a lot of chatter, and we all know how that chatter has developed over the last year or so around banks, as it was developing yesterday, surrounding Wells Fargo. So now the comments are not satisfactory, in your view, to what needed to be said?
No, I think it's just a placeholder. I mean, if you look at the aftermarket trading of Wells Fargo after the market closed, they announced this after the market closed yesterday. There was a blip of $1. It came back down. It's been flat. So investors are basically saying, you know, who cares? It seems to be just a sign of weakness to me. I've been waiting for something to happen with Wells Fargo because, again, their home equity lines of credit portfolios, HELOC portfolios, have got to be underwater. They're mostly based here in California. Connell, you and I talked last week about the housing market in general.
Right.
The fact that there's still 1.5 million homes that are unsold, and as homes continue to fall in value, if they do, more and more people with mortgages are going to be underwater. So Wells Fargo sits in the epicenter of this. I don't understand how they can continue you know, feigning that everything's going to be okay here and that they're growing organically.
All right, we'll keep watching it. Today, again, the stock price. So Mitch, thank you. Mitch Tuchman out in San Francisco talking about Wells Fargo. Moving on now, 2 federal